Alright guys, let's talk about Apple for a minute. Now I want this video to be very, kind of open conversation. What I'm attempting to do here is gain a lot of commentary from different people. Of course, I've already heard and seen a lot of different opinions. I'm going to share my opinion, a few of the theories I've already heard. We'll talk about what Warren Buffett thinks about all this. And like I said, I want a lot of people kind of chiming in. This is kind of a big deal. So Apple traded up to $157 today. After hours, this letter from Tim Cook come out, guys, and it crashed Apple stock 7.5%. And as we all know, where Apple goes, the market is sure to follow. So this is going to crash the indexes out once again. We will likely wake up tomorrow and be in a big decline. And now this once again puts Apple at a new 52-week low, okay? So let's just take a quick minute. I'm going to kind of browse through this letter from Tim Cook. I'm going to touch on a couple of things, and then, like I said, guys, let's all go down to the comment section and kind of sound off on what we all think is going on. So, of course, I got this letter directly to my email box. I also had a lot of people send it to me through text and in Facebook chat. It was almost in sync. Like, I got the email and I got text and stuff like all kind of at one time, maybe within 5 or 10 minutes of each other. Apple's quarterly expectations have been lowered even further than original estimates were saying. So all it is, guys, it's a letter from Tim Cook to the Apple investors. And so I'm briefly going to browse through this, guys. I'm not going to go through the entire thing. If you want to take a look at it, I will have a link for it down in my comment section where you can, like I said, you can pull it up and do more of a detailed research on it in your spare time. But basically, guys, it says today we are revising our guidance for Apple's fiscal 2019 first quarter, which ended on December 29th. So this is everything up to December 29th. So revenue of approximately $84 billion. And right there, let's just stop for a moment. Find me another company in the world that can have revenue of approximately $84 billion, and this is considered bad news, Only Apple, you know what I mean? Like, Apple is the only company that can turn $84 billion into bad news somehow. But anyways, a gross margin of approximately 38%, operating expenses of approximately $8.7 billion, other income expense of approximately $550 million, tax rate of approximately 16.5% before discrete items. And so there's what he's saying in this letter, guys. Based on these estimates, our revenue will be lower than our original guidance for the quarter, with other items remaining broadly in line with our guidance. While it will be a number of weeks before we complete and report our final results, we wanted to get preliminary information to you now. So in my opinion, I'm going to stop right there. I think this is a very responsible move by Apple to come out and warn investors, hey, get ready. We're about to have a really nasty quarterly earnings report, and just be prepared for it. Guys, I'm just going to read this last paragraph, and then, like I said, I will leave the rest of it for you to kind of research yourself. But when we discussed our quarter one guidance with you about 60 days ago, we knew the first quarter would be impacted by both macroeconomic and Apple-specific factors. Based on our best estimates of how these would play out, we predicted that we would report slight revenue growth year over year for the quarter. As you may recall, we discussed 4 factors, and then they go into details about where they're going to make estimate cuts and where they're going to see some slowdown in their overall growth, okay? So as anybody that tunes into the channel knows, I do invest in Apple. I'm sure most all people have some level of investment in Apple, and it's kind of being a liability to all of our portfolios right now. This is my opinion. I'm going to wait for quarterly earnings to roll in, kind of see what we get from that before I buy any more shares of Apple. And so the second theory I've heard probably the most from people is that this will kind of soften the blow of the quarterly earnings report, kind of reduce some pressure on the quarterly earnings report, kind of leaving the door open for Apple to beat on estimates and beat on revenue, and we could possibly see a reversal on the stock. And that makes a whole lot of sense too, because Apple historically has been known to underpromise and overdeliver, right? And this was a very responsible move by Tim Cook to come out, forewarn investors and kind of wave the white flag and tell everybody exactly what's going on. So I look at this as a really mature, very decent move by Tim Cook. The bottom line is, guys, this is what's up. Wherever Apple goes, the markets are going to go with it. Okay, Apple is so heavily weighted on the major indexes. When Apple goes down, so does the Dow, so does the S&P, and so does the Nasdaq. Okay, so Apple recovering, I know, as crazy as this sounds and as obnoxious as this may come off to all of you, Apple having a healthy recovery is really probably one of the most important things to getting our market back to a bull market. Now, I pulled up this article right here, guys. It's talking about Warren Buffett. A lot of people take their cues from Warren Buffett. Now, I don't take my cues directly from Warren Buffett. I always consider his opinion, and I always consider the things he talks about before I make any major decisions in the stocks that I own that he also owns. Okay, and so for Warren Buffett, sinking Apple shares is a wish come true. Now, I'm actually from the school of thought where I'm going to agree with Warren Buffett here. I mean, Apple shares going down further is kind of a dream come true. This could really turn out to be something great in a short amount of time. Now, tech has never been Warren Buffett's real strong suit, but I have to agree with him. And we were just 2.5-3 months removed from Apple being the richest company in the world, Apple being the first company to hit the $1 trillion market cap, and this overall slowdown in growth, yeah, it hurts. And investors have a lot of fear, and people are losing a lot of confidence in Apple. But, as Warren Buffett always tells each and every one of us, and he's told us all a million times, is to be fearful when others are greedy and be greedy when others are fearful. So I'm going to kind of hang with old Warren Buffett on this one, Apple stock keeps going down. Obviously, the indexes and the rest of the stock market is going to go down, and you just got to keep piling up more stock every chance you get. I'm going to go ahead and get this video uploaded, guys. Let me know what you're thinking. Like I said, go down to the comment section. Tell me what's on your mind. What should we expect? And I tell you what, real quick, I'm going to jump over here and look at stock market futures real quick. Yeah, so right now, guys, in the futures, the Dow is down 317 points, the Nasdaq down almost 140 points, and the S&P 500 down 33.25. So, yeah, the market futures are definitely tanking right now. I'm guessing it's probably going to get even more severe in the morning. Obviously, there are probably going to be a lot of institutional buy-ins in the morning when Apple hits its 52-week low. But like I said, drop me a comment. Tell me what you're thinking. Thanks for watching the video, guys.